Hey, welcome back, guys. Thank you for tuning in to A Realtor and a Lender with Lettely Foster from Compass and
Eric Rosemary with CrossCountry Mortgage.
So today we are going to dive in and explore the exciting impact of the boat show. This year was the 65th Fort Lauderdale International Boat Show. It is the largest in-water boat show in the world. Not only does it generate over 1.79 in economic impact, also there were 1,300 boats on display and over 100,000 attendees. Eric, how did you like the boat show?
So, growing up in South Florida, the boat show's always been around, and as I've gotten older, I see the impact that it has on Florida real estate, and it's just amazing that the boat show is so large right here in Fort Lauderdale.
Yeah, this is the 65th boat show, and it's growing bigger and bigger every single year, which actually brings us to our conversation for today. We are going to discuss investment properties, vacation homes, luxury real estate, and high-end mortgages. Why? Because those are all things that are tied into what happens after you purchase your boat at the boat show. So the Fort Lauderdale International Boat Show, it's not just about boats. It's the catalyst for real estate, the real estate market, especially investment properties, vacation homes, and so on and so forth. So one of the things we'll talk about is location. Once you purchase your boat, where do you plan on storing that boat? And I think Eric has two stories that he'd like to share with us today about his past clients.
Yeah, there's a lot to take in and to decide on when trying to figure out where you're gonna park your boat. Whether it's a small boat or a large boat, you may rent a private dock, you may pay for dry storage somewhere. That all can get really costly. So just recently, one of my clients decided, hey, dry storage is really expensive. Let me think about buying an investment property that has its own deeded dock that can handle the size of her boat. And she was able to purchase this townhouse as an investment property. So now it's a write-off. She'll rent it out and park her personal boat at the dock. So it's a really good investment. Not only are deeded docks more valuable than just a property on the water, but it also is a lot more secure place than maybe renting out a boat slip somewhere or doing dry storage, which can be costly.
Yeah, and the proximity to the water, that draws for vacation homes as well. Yeah. So people tend to like that.
And a lot of people don't realize that, being on the water doesn't mean you have to be on the intercoastal waterway. There's so many finger canals that are all connected to the intercoastal. In Fort Lauderdale, you can go all the way into the Riverland area, which is several miles away from the intercoastal, and you could still, get your boat there. You'd have to figure out if you can manage with a fixed bridge or not. So you have to, it all depends on the height of the boat and the size of the boat. But there are more to it than just being on the intercoastal.
Another thing as well is rental potential. So with the influx of visitors that are coming in to see the boat show, vacation homes can double as a lucrative short-term rentals for properties. So consider homes that offer amenities like pools, beach access, as well as boat slips.
Yeah, that is correct. These are things that people that are coming to visit, they're here to spend a lot of money, and they want those amenities to make them feel like they're in that coastal living environment.
That resort feel.
Yeah, exactly.
So now that we've kind of covered a little bit about, investment properties, vacation homes, what to look for, let's go on to the lending side. So Eric, share with us a few points about how to finance these vacation homes or these second homes or investment properties.
Well, there are many different types of programs for investment properties and second homes. What people do need to realize is the terms and conditions of these types of purchases are not the same as purchasing for your primary residence. They do require a little bit better credit. They do require a larger down payment and lower debt to income ratio terms. So, when qualifying that, you want to talk to a lender that has a wide variety of programs and products that are geared towards investors or towards second homes.
That's really good to know. So, for example, the down payment on these vacation homes or investment properties, approximately how much would that be? Or percentage-wise?
Percentage-wise, yeah. So for second homes, you can get away with 10% down, as low as 10% down. It will have mortgage insurance, at least if your loan amount is under the what's called conforming loan limits, $804,000. For an investment property, you can also purchase with as little as 15% down. However, with both the minimum down payments, you're going to see higher interest rates. For both of them, Fannie Mae will require 20% down to keep the rates and things in line. And then we have the other programs where we don't have to verify your income. We may verify the market rent in the area, and we can even use short-term rental income, projected short-term rental income to qualify. So if you're self-employed or you're not showing any income on your tax returns, these what's called non-QM products, non-qualified mortgage programs, are available for you at pretty reasonable interest rates without having to verify your income.
Those are really great programs, it sounds like.
Yeah, they're a good mix of our business right now. And if you're looking to buy multifamily units and things like that, this is also a great option too as well.
And regarding your second home, does it have to be certain miles away from your primary residence to be considered a second home?
Not necessarily. So think about living in California. You may live in Los Angeles, but then buy a house in the mountains. You may not necessarily be 100 miles away, but that land to sea or that land to mountain will qualify as a second home. So if you are in Fort Lauderdale and maybe live out in Weston and you want to buy a condo in Fort Lauderdale on the beach, or maybe a house on the water for your boat and go there on the weekends, that would be considered a second home. It just needs to make sense.
Good. That's really good to know. I know a lot of times we have people who, they ask us about that, like, hey, I want to purchase a second home in Orlando, and they live in Miami. So we have.
Well, that's over 100 miles, so there would never be questioning that. Another example is, I live in Boca Raton. If I wanted to buy a condo in Miami, in Brickell, to be close to downtown, that makes sense, although it's not 100 miles away. So it's got to make sense. You can't say I'm going to buy a second home in Boca and I live in Delray and there's no amenities or anything like that.
Yeah, that wouldn't fly.
But there always is purchasing it as an investment property, and sometimes the interest rates are comparable to that of a second home. Same thing with the down payment. Remember, you can get away with 10% down on a second home, but sometimes it makes more sense to do 20% down.
Let's get right into that, because I know that ties us right into our segment of luxury real estate and high-end mortgages.
Yes.
Which goes right into jumbo loans and other programs that you guys have to offer. Tell me a little bit about what CrossCountry offers to clientele that's in this market.
So as Florida real estate has risen over the last few years, jumbo loans are becoming more prevalent. Fannie Mae has introduced new loan limits for 2025, or anticipated loan limits for 2025. It's going to be a loan size of $804,000. So any loan over $804,000 is considered a jumbo loan, and we have a wide variety of products for jumbo. We were just talking about it for one of our clients right now, and most jumbo products we can get away with doing as low as 10% down. But again, your interest rate is going to be affected by the low down payment. 15% down opens up some more investors, and then 20% down obviously is going to open up pretty much all of them.
Yeah.
And that's typical to about $3 million. If you get over a loan over $3 million, some of the investors start falling away. They don't lend in that realm.
Yeah.
But over $3 million, we have several investors that will even go as high as $15 million.
Now that really opens up quite a bit of investors
Yeah.
for that program. I know at first, speaking of the same client, we were kind of limited with what we were seeing, but then just opening up the down payment amount, that changed things for them as well.
Yep. And another thing that we can look to do if somebody wants to buy a house in the 1.4, 1.5 range, we can break the loan up into two loans. We can do a first mortgage at $804,000, which is the conforming loan limits, and then follow it up with a home equity line of credit or a second mortgage. Why would you do that? Well, you can do as little as 5% down. Maybe their credit is not as solid as it needs to be for a jumbo loan. Maybe they only can verify their income for 1 year. Maybe they don't have the reserves. Maybe there's a lot of things that they may not have that most jumbo investors want to see.
Yeah.
And the blended interest rate between the first and second mortgage, the combined interest rate between the first and second mortgage, gives them a lower payment than, say, doing a jumbo loan. So not necessarily jumbo rates are higher. They're usually about the same, if not a little bit lower, but they're a lot harder to qualify for. Not to scare everybody off. There's a jumbo loan out there for everyone, but sometimes this makes more sense.
Yeah. See, these are all really great tips that Eric is sharing, guys. And just as he mentioned, not every program is fit for one particular file. That's why it's so important to reach out to us, have Eric take a look at your profile, just have a consultation, because I'm pretty sure we will be able to tailor a loan for your need.
And that's what mortgages are. They're tailored fit to your needs. It's never just one and done. And a lot of people will call me, well, what's your rates? Well, rates change. Rates have a lot of factors in it. And the way you file your taxes or how many years of taxes we can verify can significantly impact your rate compared to, say, what your friend got just yesterday.
That's true. So when you're calling in and asking, well, my friend got this and my friend got that, your friend's not telling you the whole story. What they're not.
Or your scenarios are not identical. Being a second home versus an investment property or putting down 5% more can really make a difference when we're dealing with jumbo loans. Conventional FHA, first time home buyer, that's a different story. That's a little bit easier to figure out. When it comes to a jumbo loan, it's not hard to figure out. Just there's many different options and there's no straightforward guidelines that you follow. The investor, the end buyer of that loan, whether it's a loan that we do and keep in-house at CrossCountry or we sell off later on, you're following that investor's guidelines and their requirements. And the littlest thing could say, yeah, we're not interested in this loan, move on to another lender. That's where knowing these programs really comes into play and work with a lender that is used to handling these types of loans.
And objections as well.
Of course.
Yeah. Well, thank you guys so much for tuning in to today's show. And if you have any questions or if you'd like to suggest a topic for our next segment, please feel free to message us directly. Don't forget to subscribe to our YouTube page, Eric Rosemary Mortgage Masters, and we look forward to seeing you next time.
Have a great day.
Bye.